Multifamily is dead. That's what you're hearing at conferences, in investment forums, across social media. And you've heard all the complaints. Cap rates are compressed beyond reason. Interest rates have killed cash flow. Transaction volume has fallen off a cliff. I can't find deals that pencil. The big institutions have bought everything worth owning. You know, as someone who's been in the multifamily investment space since way back in 1996, almost 29 years, I understand the frustration. I've watched as once reliable formulas for success have seemingly stopped working. You know, properties that would have been no-brainer acquisitions just a few years ago now look like guaranteed ways to lose money. So here's the grim reality. The numbers tell a dark story. Multifamily transaction volume has dropped nearly 75% from its peak. Deals that once attracted 30-plus offers now struggle to find 5 serious bidders. And these are the survivors of the 2022 culling of the inexperienced investors. Cap rates that had compressed to historic lows are now trying to expand in a financing environment that makes positive leverage almost impossible to achieve. Sellers remained anchored back in 2021 valuations, while buyers need 2019 prices to make deals work. This standoff alone has created a market where properties sit unsold for months, sometimes years. Now add to this the rising construction costs, supply chain issues, and the increasingly complex regulatory environments in many of the cities, and you have a recipe for what many are calling the death of multifamily investing. But wait, is this really the whole story? You know, while scrolling through my deal flow last week, something caught my attention. Among the dead deals and overpriced offerings were properties that, upon closer inspection, actually presented viable opportunities. No, they weren't plentiful. No, they weren't obvious, but they were definitely there, which led me to the realization that multifamily isn't dead. It's simply in transition. And transitions, while uncomfortable, create the greatest opportunities for those willing to adapt. There are deals still out there. Our students are doing them on a regular basis. They're just not being advertised. Now, here's what the doomsayers aren't telling you. You see, transactions, they are happening. They're just not happening the way they used to. The best deals today, they're not hitting the broad market. They're being traded quietly through established relationships between brokers and investors who have demonstrated that they can close in challenging environments. These relationship-driven transactions are flying under the radar, creating the illusion that nothing is happening when in reality, the market is simply becoming more selective about who its participants are. You see, now is the time when fortunes are made. Real estate has always been cyclical. The investors who truly build wealth, they're not those who pile in during the boom times. They're the ones who position themselves during the transitions to capitalize on the inevitable upswing. Now consider this. Every significant downturn in multifamily has been followed by an even more significant upturn. Those who used the dead periods to build their infrastructure, their relationships, and capital reserves were the ones who reaped the greatest rewards when the markets recovered. So instead of lamenting on the death of multifamily, here's what smart investors are doing right now. Number one, they're building broker relationships that matter. You see, in today's environment, having casual relationships with a dozen brokers, that's just not going to cut it. You need deep, trust-based relationships that start with commonality, with a select few brokers who know you can perform, or you partner with someone who is a known performer. This means following through on what you say you do, providing quick, decisive feedback on deals, being transparent about your criteria and capital, and adding value to brokers beyond just being a potential buyer. Number two, they're strengthening their capital stack. You know, the best opportunities often come to those with ready capital. So now is the time to shore up your existing capital, shore up your investor relationships, develop relationships with debt brokers and lenders, create contingency financing plans for different scenarios that may arise in the upswing market. Consider alternative financing structures that might work in today's environment. 3, building the right team. You see, when the market accelerates again, you're not going to have time to build a team from scratch. You want to use this period now to identify and build relationships with property management companies. You want to develop connections with contractors and vendors. You want to create systems and processes that will be ready to scale when the scaling starts to happen. You want to bring on key team members who can help you move quickly when the opportunities arise. You need to refine your investment strategy. You know, the strategies that worked from 2015 to 2021, they don't work anymore. You want to be working on strategies that work in 2025 and beyond. You know, smart investors are analyzing which submarkets have proven resilient. They're identifying emerging demand drivers. They're developing new value-add strategies that work in today's environment. They're creating multiple acquisition approaches to adapt to the changing conditions that we're seeing in 2025. You know, we have come upon a new multifamily paradigm. And here's my prediction. We're not witnessing the death of multifamily. We are witnessing its evolution. You see, the easy money period is over, but the fundamentally sound investment strategies, they still remain. People will always need housing. Demographics continue to favor the rental market. New construction, it hasn't kept pace with household formation, and inflation, while moderating, it continues to drive replacement costs higher, creating a floor for well-maintained existing assets. So what is changing is who is going to succeed in this space. You know, the tourist, those people who jumped into multifamily because it seemed like easy money and they were led into it by people who were telling them it was easy money, okay, they're gone. And those influencers are gone as well. But what remains are the professionals, the relationship builders, the system thinkers, the patient capital. Now is the time to double down or walk away. So is multifamily dead? Well, it's only for those unwilling to adapt to the new reality. For those who are willing to embrace transition, for those willing to build meaningful relationships and position themselves for the next cycle, multifamily isn't just alive. It's poised to create a new generation of wealth. So the question isn't whether multifamily is dead. The question is whether you'll be ready when it comes roaring back to life. So, what are you doing today to prepare for tomorrow's opportunities? If you like this content, hit the like button and subscribe. We'll send you more.